We decided to create a fintech company in order to develop a new stock and crypto brokerage in order to empower retail investors here, by, as you can see here, by leveraging artificial intelligence, social media, and swarm intelligence while avoiding dark pools to make sure that, to change financial markets in order to make them more fair and equitable to retail investors and bring some transparency to the hidden dangers of dark pools and payment for order flow, which is still, unfortunately, a lot of people still don't know enough about dark pools in general, and they have no idea how dangerous they can actually be. So as you can see here, we have raised so far over $285,000 since Monday. And I want to say, again, I appreciate every single one of you. It's been extremely challenging thus far. We have put in about, 2 years and 11 months of blood, sweat, and tears into Lit Exchange, all the partnerships, the other deals, the regulatory agencies, the attorneys, the legal fees, the filing fees with the Securities Exchange Commission EDGAR website and everything else that goes along with it. It is very, very expensive, as you can imagine. And as we are creating this broker-dealer, we need to make sure that we are well capitalized. And in order to do that, there are two ways. There's either go to hedge funds and VC firms or crowdfund with retail investors. And the idea here is to give retail investors the opportunity to actually own the company, because as you guys have seen with Robinhood and other such broker dealers, they are deeply embedded with hedge funds. And while there can be some decent hedge funds out there, the majority of them do want some sort of a quid pro quo. And you guys have seen many family offices and hedge funds over the last several years that have been doing various acts of market manipulation, illegal actions, naked shorting, etc. Pulling of buy buttons, pulling of sell buttons, even certain organizations removing retail's ability to buy or sell stocks that they either should or should not be able to in the first place. Gia Fam asks, hey boss, are you looking to hire a software developer? Yes, we are adding more full stack devs to our team. So I will put a link to that in the chat as well and down in the comments below. If you're watching after this live stream is over, I'm going to put a link below so that you guys can actually apply. We are asking, as of now, for developers to be located in the greater DFW area, as we have come to Dallas specifically for the launch of Lit Exchange. I've moved my family down here from the far northern suburbs of Chicago. We used to live in Woodstock, Illinois, and we are here now, one, to live a better life, but mainly in order to launch Lit Exchange in the new financial epicenter of America, which is Dallas, Texas. No more New York. Let's put it that way. No more New York. Here you go. I'm dropping it in the chat right now for you guys. And by going there, you can see everything about everything in relation to the company, the business plan, the executive summary, pitch deck, SEC EDGAR filings, the private placement memorandum, and so on. Here, you can just go here to click here. You can see the pitch deck, the business plan, the independent auditor's report, the offering memorandum, the subscription agreement, the investment disclosures on the SEC EDGAR website. Check out all the highlights, the information there as well. So again, thank you guys. Let me see. I see quite a few questions in there in the chat. I don't want to skip you guys. Trevor, the The maximum investment amount is $5 million. And retail investors can own Lit Exchange for as little as $500. You can get equity in the company. And in the future, when we have a liquidity event, you could then sell your shares. It would be a long hold of at least a couple years. That should be made obvious to everybody immediately. It's not something that is highly liquid. It's not something that you can immediately sell like you'd be able to sell, your stocks on the stock market, because we are not yet listed on the New York Stock Exchange, although that is in the plans and in the business plan for you guys to read for yourself at the link above. First, we will be launching here in the United States of America once we've achieved all regulatory approval, or received regulatory approvals and met any legal requirements. And then we will be launching in countries like Canada and Europe and eventually South America. And we will do so in stages. At least that is the plan, okay? Just to give you guys a heads up. Get that chat out of the way. What percentage do you hold? I am majority owner of Lit Exchange. I own 70% of the business, and my business partner, Mehul Patel, owns the other 30% of the business. Appreciate all you do, boss. Thoughts on UBS $2 billion liquidation? UBS is selling off a large portion of their commercial real estate. As a matter of fact, UBS is selling off some of the Credit Suisse commercial real estate in anticipation of a further drawdown and correction in real estate in general. Right now, you guys are seeing it in commercial real estate. Soon you'll see it elsewhere as well. And you can see here, Sleepy Joe Biden is calling for a soft landing. There's absolute chaos going on right now at the White House. And you guys can see that here. Let me play this for you real quick.
Yes. Yes. Shh. I'm not going to answer your question. I'm talking to them first, okay? The audience first, okay? Yes, sir.
Thank you so much. Thank you, President. Thank you, President. Thank you, President.
Has the U.S. beat inflation, Mr. President?
Yes. I told you we're going to have a soft landing. We're going to have a soft landing. My policies are working. Start writing that way, okay?
And Mr. President,
Anyway,
did you know
Thank you so much. We got to move this way.
Mr. President, did you know your son reached out to a U.S. ambassador about Burisma?
Thank you, Press. We're going this way. Thank you so much.
You heard him, ladies and gentlemen. Sleepy Joe says we're going to have a soft landing. So make sure you're well aware. However, you guys saw the markets bled upwards today. I said yesterday that there is potential to be some significant volatility in financial markets today. And you guys saw with all the macro econ news that came out, we had a huge move to the upside. Markets just melted up. But here's the funny thing about it. There was a retail sales report that came out today and showed that retail sales in terms of dollars was higher than expected. Now, you can see here, PhD economist E.J. Antoni said, ask and you shall receive. July, advance retail sales estimate is 14% above April of 2021, but is down 3% in real terms over that same time. Businesses are selling stuff, but at much higher prices. So take a look here. This is seasonal adjustment. This is 2021. This is the price here that you're seeing right now. This is the amount of retail sales. As you can see, retail sales are up. That's the green. That's the nominal amount. But here's the real REAL retail sales when you account for inflation. And as you can see here, accounting for inflation today, retail sales are down quite a bit, probably close to $50 million, or should I say millions of dollars, 600,000, so around 50,000 times a million, several billion dollars, probably closer to $5 billion to the downside. from 2021. But of course, inflation is so rampant that the actual amount spent was significantly higher. So again, everybody in financial markets knows this. The high frequency traders, the market makers, they all understand what's happening here. Retail sales dollars being higher does not mean that more goods are being sold. It just means that everything's more expensive. But that's an easy way for them to pump collateral, pump money into collateral in financial markets. And they need it. They need it now more than ever, as I showed you guys yesterday. Let me show this other one first before I get into that. And you guys can see why they need so much collateral right now. The collateral against hedge fund exposure to short positions and toxic derivatives has increased to 891%. Well, 892. I rounded down, but I should round up there. What this means is that the collateral held against the exposures by hedge funds has increased in the first quarter to 891% because bank exposures to hedge funds are secured as banks take initial margin. That prevents these funds from being margin called. And in order to maintain their current short positions and their extensive amounts of leverage, the actual fair value collateral to the net current credit exposure, the amount that they're exposed to losses, is higher than it has been since the the global financial crisis of 2008 at 127.8%. That's up 10% from the fourth quarter, from the prior quarter, and up 21% from 2022. Up around 30% from 2020. You can see here, these numbers are not looking good for hedge funds at all. Why is this happening? Well, today you guys may have seen that the reverse repo fell to $307 billion across 63 counterparties. Yeah, that's a lot of money for sure. However, that's down over $2.2 trillion from last year. So there's a measly $300 billion left by money market funds, mutual funds, being traded in the overnight repo market because the excess liquidity has been sucked out of the system by the Federal Reserve. So America's bond auction is going to eventually here go no bid in the coming weeks. This bond auction today, the Federal Reserve sold, I know it's kind of small, so I'll read it to you. They sold 56-day bills, treasury bills, $90 billion worth. $90 billion worth of 56-day bills, and then an additional $95.5 billion of 28-day treasury bills. The reason this is important is because these are short-term treasury bills. So the majority of these purchases occurred from countries like Japan, who are doing things like using the carry trade to create an arbitrage between the Japanese yen to invest in short-term T-bills and investments here in the United States, like these 28 and 51-day treasury bills that we just mentioned. But even still, a lot of the money for these had to come directly from the reverse repo. The reverse repo today is down about $25 billion from where it was yesterday. $25 billion. That was specifically for these high demand treasury bills. There is going to be another auction of longer term treasury bills, bonds coming here next week. And that, when we start seeing the 3, 5, 10, and 20-year bills, is when you really start to see a shitload of liquidity get used by the United States Treasury to pull it out of the money market funds instead of sending it to the reverse repo and buy these bonds through auction. They do that because other governments are not buying long-term U.S. bonds and long-term U.S. T-bills, etc. What's going on, Jana, Steve? Welcome, my friends. Trevor says, hats off to you, brother, for getting so far. You must have balls bigger than Big Mike Obama. That's probably the case, I guess. But who knows? Big Mike's got a big pair probably. Let's put it that way. And basically, after the reverse repo is almost completely drained, the United States Treasury will have to drain the TGA. The Treasury General Account is the savings account, let's put it, of the United States. And there's not a whole lot in there right now. There's a few $100 billion in there, which sounds like a lot, but that money gets spent really quickly when our government is printing tens of trillions of dollars on a continual basis. So I think right now the country is printing $1 trillion of government debt every 3 months. So every 3 months, the United States is increasing the debt of this country by $1 trillion. That's 1,000 billions, and every billion is 1,000 millions. Wouldn't it be nice to have 1 million, let alone 1,000 of those? And if you had 1,000 of those, wouldn't it be nice to have 1,000 more billions? That's a lot of freaking money. I say it so ridiculously to give you guys kind of a concept of how high that amount is. This is what I'm talking about in the terms of dark pools. And the fact that dark pools are absolutely ridiculous and just off the chain right now. Banks are trading, this is centrally cleared derivatives. Now, centrally cleared means that they go to a lit market, okay? Only 3% of Forex trades, the derivative trades by banks, are going to lit markets, to lit exchanges. 97% of Forex trades, right, fiat currency type trades, are happening in dark pools. So the Office of the Comptroller of the Currency is giving us the centrally cleared derivative transactions. We're heavily concentrated at qualifying central counterparties, with 82% of notional amounts reflecting the 2% risk weight. Anyways, in English, only 6.9% of precious metal trades are happening on lit markets. The other, 93% of silver and gold trades and derivatives by banks are happening in dark pools. And you can see that with credit, that's only 29% are going lit. With stocks, for example, equities, only 25% are going to lit markets. So the other 75% of all bank derivative trades are happening in dark pools. Again, that's part of the reason, as I told you guys, why we're creating Lit Exchange and giving retail the opportunity to own it instead of other banks and hedge funds. Because we believe that we can actually help people to get some of these trades out of dark pools. Today, the Securities Exchange Commission charged over 24 various firms $392.75 million because they illegally communicated, because of illegal communications by swaps dealers and other violations. These guys were messaging each other on Signal, WhatsApp, text messages, and the firms admitted to these violations. They're not supposed to be messaging each other in terms of sensitive data and trade information by Signal and other encrypted messaging apps or WhatsApp. Obviously, as you guys know, there are other countries that could potentially be getting a lot of that data, such as China. Among other firms charged by the SEC, the largest penalties went to 4 brokers, which each broker paid $50 million to settle these claims, including Edward Jones and Raymond James and Associates. Now, these guys are supposed to be helping retail investors. But as you guys can see, they're constantly doing things that they shouldn't be doing that allows them to have an upper hand, front-run trades, and so on. As you guys can see, the CFTC said the firms were, quote, failing to supervise certain communications for hundreds of its swap dealer personnel over not just a little while, not just a few months, but a 5-year period. Throughout 5 years, these guys were sending each other secret messages in which allow them to front-run trades, manipulate markets, create derivatives and conditions in which they could beat retail and trade against people. Not to mention, this is highly illegal, but instead of getting, losing their securities licenses or getting sent to jail for fraud, they get a slap on the wrist. Tell me this doesn't piss you off, because it pisses me off. Again, that's why we decided to create Lit Exchange 3 years ago and why we're still developing it now. And we are in the crowdfunding stages. And that's why we're coming to you guys, seeing if you'd be interested in investing in the company once you've had a chance to do your due diligence on it. So the link is pinned up in the chat. As you can see, breaking mortgage demand in the United States, according to the Kopasai letter, and using Reventure Consulting charts, has dropped to its lowest level since 1995. Americans are not going back to the office in the way that they were before. It's just not going to happen. Not to mention, a lot of the offices are just closing down. I'm sure if you guys are using Twitter or any other of these apps, LinkedIn, etc., you're getting notice of just how many companies are laying off thousands of people. Paul Andrew says, the only guy I know who reads quarterly derivatives reports. I appreciate the education, boss. Thanks, man. I know I'm a fucking dork. You know, I'm a nerd in that sense. But like I said, for 20 years now, for my freight brokerage business and for other businesses that I've had, I've realized that reading these reports directly from the Office of the Comptroller of the Currency and SIBO and these government agencies tells you exactly what the fuck is going on in this country. It lets you get ahead of inflation, lets you get ahead of recessions and other issues. But the majority of people don't read them. And they're right there. All you have to do is download them from their website. It's really easy. And take the time to read them. But most people don't, because these are, 80-page, 150-page documents, and they're boring as shit. So I try to give a little, to add a little spice to them. I try to pick out the best pieces and bring them to you guys and show you guys, like, this matters. This is macroeconomics and geopolitics here, and they are the number one driver of financial markets, in the sense that the stock market is not the economy, sure. But you can tell which way the stock market and business is going to go before it happens, because we're being told what the numbers are like before the stock and bond market actually reflects it. They are always going to reflect it after the fact. The 2008 GFC, the 2000 dot-com bubble, the current largest asset bubble we have ever seen in the history of the world is going to eventually burst, but it will happen after the recession is well underway. And it's already, in my opinion and many other people's opinion, begun. You don't have inflation like we have now if there isn't a recession. You don't have unemployment like we have now if there isn't a recession. Currently, the unemployment numbers look somewhat good, but that's only because only 1 in 4 people is actually filing for unemployment. So in actuality, the unemployment numbers are 400% higher. And there was 350,000 people last month, the month of July, that applied for unemployment. And if only 1 out of every 4 are actually applying for it because they either don't qualify or because they're doing other things, or also out of that, if you're looking for a job and you don't get a survey from the government, they're not going to count you, in the sense that people who haven't been actively looking for a job in over 4 weeks and tell that to the United States survey takers do not get reflected as unemployed workers. If you've been out of a job for 5 weeks, for example, and say you're sick or you're dealing with family things or you're busy with others, right, and you haven't been looking for a job in the last month, they do not count you as unemployed. This is the way that the current administration is fudging the numbers on these topics and these macroeconomics and such, because they don't want you to think that we are in trouble, that our country is and the global economy is in trouble. Turbo says, I understand your minimum investment is $500. Will there be a chance to only invest $100 for people with smaller accounts? I'm sorry, my friend. I am bound by the regulatory requirements and the terms of the offering. So unfortunately, $500 is the entry point, the entry level for these. There are a variety of offerings at different levels. They are at, and it is also cumulative. So if you can decide to save up in a savings account or a checking account for yourself, and once you get to $500, you can invest in the offering if it is still ongoing. We have levels like the Moonwalker at $500, Silverback for $1,000, Apex Legend for $2K, Juggernauts at $5,000, Interstellar Investors at $7,500, Gamma Squeezers at $10,000, Deep Fucking Value Investors at $25,000, which we have a few of, actually. Cheers to you guys as well. Titans for $50,000, Capital Commanders at $100,000, and Delta Bosses for $500,000. So you guys can take a good look at all of the offering, the memorandum and et cetera there. But unfortunately, no, I am legally bound by the terms of that. And so far, out of the 141 founding investors, divided by the 285,500 raised to date since Monday, over the 141 founding investors equals right around an average of just over $2,000 per person. So it is a popular tier level as well. Tyler asks, we have until August of next year, though, to invest, right? Well, either until we reach the maximum cap investment of $5 million or until the period of 1 year. So hopefully we reach it much sooner than 1 million, because we would like to launch in the near future. But we do need to be well capitalized, as I've stated to you guys before. And that is why we have launched the Founders Program campaigns, in order to meet these capitalization requirements and to apply for and receive our FINRA licensures. But as I told you guys, the Founders Program is live now. The time for change is now. You can see on the SEC Edgar website, if you search for Lit Exchange or look directly on the link that I have pinned up, you will find our offering statements here as well for Regulation C and our Form D and DA filings as well. And again, so we're about 57% of the way to our goal as of now. And again, thank you everybody for your investment. Doug TV, how many shares the investors will get once it becomes public? That's not something that I know at the moment, because you're getting a percentage, for example. I can say this, yes, because these are the terms of the offering, and this would be a tombstone, what's called by the regulators a tombstone fact. And the fact would be that as you are getting a percentage of the company with your investment, whatever that might be, right? If you get $500 or $5,000, whatever, you get the equivalent number of shares that is being offered in the offering relative to your percentage in the company. So I can't say, if we issue, say, for example, 100 million shares, you'd get your percentage of 100 million. If we issue 1 billion shares, you get your percentage of that. So you're still getting the correct amount. For example, like if GameStop or AMC were to do a stock split without the price changing, right? Well, sorry, I shouldn't compare us. Please forget I said that. I shouldn't compare Lit Exchange to AMC or GameStop in any way. I don't think that that's legal, so please forget I just said that entirely. If you were to compare it to any stock split, period, and the stock price didn't change from before or after the stock split, it's kind of what I'm talking about there. You're getting your percentage, regardless of whether you get 100 shares or 1,000 shares of your percentage of the outstanding. Just to give you a heads up. I hope that makes sense. You did say we can stack purchases, correct? 500 now, 500 later. Yes, Jason, that's correct. They are cumulative. So if you invest $500 today, and for example, $500, next Friday or something, say whatever you get paid, or you sell something, or you make a lot of money in the stock market or whatever, and you decide you want to, let me scroll up. You decide you want to invest, then it would be cumulative. So as you can see here, taking two $500 investments, you would receive the $1,000 level of perks. So when the raise is complete, we will then go through and confirm everybody who has invested multiple times and make sure that you are receiving the perks and the equity share ownership percentage for the tier under which you have invested cumulatively. The same thing goes for if you want to do $2,500 twice, you do $2,500 two times, then you would receive the juggernaut perks, etc. It's been, let me switch this up here. Absolutely, Doug, Jason, Richie, thank you guys. So, folks, that's kind of where we're at. You know what I mean? Sorry, something just popped up on my screen. I got to close it out because I can't see what I'm doing over here. We are right now in the crowdfunding stage. We have been working on development and business plans and partnerships, regulatory things, legal things for 2 years and 11 months now. We are in the crowdfunding stages, and we are getting close to our goal of completing development of our website, software, and applications. We have a lot of partnerships in the works, of which I don't think it's legal for me to mention them at the moment, so I will not. And I'm extremely eager to get started, in this terms of actually launch and begin operations. But as of right now, we are hiring. We will be bringing on more developers. We need more full stack developers. And then, of course, in the near future, we're going to be hiring financial advisors, customer service people, compliance officers, financial officers, and so on. And so there will be a significant number of positions opening both remotely and here in the DFW area. Again, as I told you guys at the beginning of this, I decided after conversation with my partner that Dallas is the place to be. It's either, as far as finance goes, it's New York, Chicago, or Dallas. And right now, New York's number 1, Dallas is number 2, and it is greatly becoming the Silicon Valley of Wall Street. So what Silicon Valley was to tech, basically, Dallas is actually becoming kind of the Silicon Valley of Wall Street now because of the great number of tech companies that are here in the Texas area as well. Fidelity and Schwab are both based here. GameStop is based here, and many other Fortune 500 companies and stuff. So definitely the place to be so that we can hire the best of the best talent and bring on as many talented individuals and the smartest people much smarter than I am, especially in their respective field. That's what business is, right? Like my partner likes to say, you look at Elon and stuff and see that he's running, a rocket ship company going to outer space, and an electric vehicle company, and the boring company, like a drilling company, if you guys don't know, and these things. He's not creating these electric cars himself. He's not building the rocket ship by hand or engineering it. He's hiring people smarter than he is in their respective fields to do these things, to design, create, build, test, and eventually follow through. He is doing an excellent job as a chief executive officer of some of these companies, and unfortunately, in my opinion, with X, that's not the case, because he made Linda Yaccarino the CEO of X, and that was a big mistake because she is literally listed on the World Economic Forum as someone who follows the WEF agenda. And if you guys have watched this channel or done your own due diligence, you'd realize that even if you don't believe in the deep state, doesn't mean that the deep state doesn't exist. And the World Economic Forum, Klaus Schwab, works hand in hand with guys like George Soros, Alexander Soros, the Rothschilds, and many other people, including Barack Obama, and many other people that you don't even know who they are. I don't even know who they are. And that's the way that they want it. The people that we see in power now, like Joe Biden, Kamala Harris, are puppets of the deep state, of the World Economic Forum. And they're working specifically to enact their agendas. Doug TV says, no wonder Mr. Evil Kenny is trying to open in Texas. That's correct. As of about a month and a half, 2 months ago, Citadel owner Ken Griffin came out with news that BlackRock and Citadel are partnering to create a new stock exchange, a new exchange in Dallas, Texas. That is with no surprise. It comes to, it is, to me, absolutely no surprise that Citadel is very well aware of who I am and what I'm doing, who we are as retail and what we're doing. And in my opinion, what you see right now with Lit Exchange is something that they're acutely aware of and keenly understanding that as of right now, they may not be concerned, but it is something that they are keeping closely on their radar. And they will most definitely be concerned with it in the near future. That I can assure you of. Zachary says, man, this casino of a market is wild. It seems like they can pump it forever. That's right, man. I told you markets today were going to be extremely volatile, and they melted up like nobody's business. And like I showed you guys at the beginning of the video, it's directly related to the retail sales numbers because they're high. But when you look at the actual number of retail sales and not just the retail sales dollar amounts, the actual retail sales are lower than they were 3 years ago. The only thing that's more expensive is inflation, hence the actual dollar amount being higher, which is crazy. So again, Hilsey, Zachary, Trevor, I appreciate you and everybody else listening right now. Paul, thank you guys for your comments. Trevor says, out of all stocks today, AMC looked the most volatile. They're trying everything to hold MOAS back. Zachary says, it melted like Biden's ice cream cone. You guys are fucking hilarious. I love this. I don't want to end this stream, but I have to, as the family's got to go. They're waiting on me. So I wish you all peace and wealth. Thank you for your trust and support. I will bring you another update tomorrow, probably during